We just had numbers breaking from Netflix that's sending the shares higher by 9%. That's on the strength of the additions to subscribers. In the third quarter, Netflix grew paid subscribers by 8.76 million. That's versus an estimate for gains of 6.2 million. As you can see, earnings per share and revenue also coming in ahead of estimates. A little bit of disappointment on the forecast front. The fourth quarter earnings per share for Netflix, it says, will be $2.15. Analysts had been predicting $2.17. The other thing you need to know here is that the company is indeed confirming it is raising prices in the U.S., in the UK, and in France as well. The prices in particular for its premium plans will be going up by $3 to $23, and also for its basic plan by $2 to $12. It's got two other plans. Those plans are going to stay the same. Of course, we're looking for more color from the company about how the ad tier rollout is going, how the password sharing crackdown is going, although that seems to be showing up in the numbers here, and other matters. It talks in its shareholder letter, among other things, about the opening of Netflix House, which we talked about recently, a new in-person experience for people who are fans of Netflix shows. So a lot to digest here. To help us do just that, let's bring in Jamie Lumley. He's sector analyst at Third Bridge Group. So what I'm trying to get to the bottom of here, Jamie, is was that better than estimated subscriber gain because of the crackdown on password sharing that where people said, well, I can't share anymore, so I got to sign up for my own account?
It's a great question. And I think if we look at these numbers, there are a few things to keep in mind. If we think about that crackdown on password sharing that was rolled out in Q2, so Q3 is the first real quarter to see that in effect. And off of some pretty strong Q2 numbers, Netflix has definitely raised the bar again and seemed to have picked up a lot of momentum in that subscriber growth. What we've been hearing from our experts is that there are a lot of expectations on this crackdown on password sharing. And as Netflix has talked about, there are potentially 100 million households which could be sharing Netflix passwords. And our experts estimate that getting just half of that is not only reasonable, but is a good goal for Netflix in the longer term. So if we think about what's happened this past quarter, even keeping in mind the fact that there's been this backdrop of the actors and writers strike stopping content from being produced, putting into question what the release schedule will look like going forward, looking at the role of the crackdown and password sharing, it could have definitely played into some of these really strong subscriber growth numbers.
And Jamie, what about this news we're getting of these price hikes? In your opinion, smart move by Netflix, and how do you think consumers respond?
So we've been hearing a few different things about pricing for Netflix. And one thing to first highlight is we've been hearing from our experts that raising prices on the ad-free plans definitely makes those ad-supported plans more attractive. With that $7 price tag staying the same, that now looks like a pretty sweet deal. If you think that for $23 now, that's what it costs for the most premium plan that Netflix has. So using this as a tool to drive some more of those cost-conscious customers to that ad-supported plan and really start to scale that business is definitely something that Netflix could be doing. The risk here, of course, is with that uptick in price on the other side, and keeping in mind then the fact that the actor strike is still ongoing, and this could factor into the release of new content, the release of second and follow-up seasons to some of Netflix's hit shows. There could be some concerns about what this could do for churn, but on the backs of these strong numbers in Q3 for subscriber growth, heading into Q4, which is traditionally one of the stronger quarters for Netflix in terms of adding subscribers, they're hoping to see that, they found the right recipe for the balance between attractive plans and showing value to consumers.
Yeah, and just to clarify here, the ad plan, it looks like that the price is not going to change for that plan, and the standard plan, basic and premium, are the ones that are going higher. Jamie, just to follow up on that, it was interesting to me in the shareholder letter, Netflix highlighted two shows. One is One Piece, which is original programming, big hit with my kids. The second is Suits, which of course is a program that they didn't make new episodes of. They bought it and they brought it over to Netflix. And that has been something that historically has driven demand at Netflix. Is that going to continue to be able to do so if the actor strike continues?
It's a really good point, and that highlights one of the trends that we have been seeing across the industry, which is a bit of a resurgence in licensed content and a bit of breaking down the walls of that exclusivity, which was such a staple of the streaming wars for the past few years. Our experts have highlighted that, particularly with the initial launches of other streaming services from Disney or Comcast with Peacock, how a lot of that content was then only available on those platforms. But as you highlighted with Suits, this was one of Netflix's shows of the summer. It was in that top 10 ranking for a number of months there. And this is something which was actually on linear networks until 2019. It's not new content, but a lot of viewers on Netflix, it's new to them. One thing that we've been hearing is this could be a new trend to see content brought into a platform like Netflix, which, while not necessarily new, might not have been seen by a large portion of that customer base, and then be able to get some of those really positive viewership and engagement numbers. Another very favorable thing as the industry overall grapples with the best way to move forward in a profitable manner. Licensed content is cheaper than producing something on your own, and particularly as the strikes in Hollywood continue, this could definitely be a viable way forward for Netflix as it looks to continue to have strong engagement numbers.
Yeah, that is a good point. Something else that stands out to me in the letter that I wanted to point out to you, we have seen perceptions around the ad business really vary here for Netflix, and the company itself has said it's gotten a little bit of a slower start than I anticipated. But there's something that stands out to me in the release here. They said in the third quarter, the ads membership was up nearly 70% quarter over quarter, and it also accounts for about 30% of all new signups in the 12 countries where they offer that ad tier. Is that encouraging to you as an investor?
So if we look at Netflix, there are definitely a few things to think about for that ad tier. On the one hand, 70% growth is definitely strong. On the other hand, it's coming from a relatively small base. Reports earlier this spring had the ad-supported tier at about 5 million users. So it's definitely, even compared with some of the other smaller streaming platforms out there, very far away from being a scaled business. What we've been hearing from our experts is that there is so much potential for this offering. There's a great opportunity to really pull different levers to scale the revenue from this business through having higher than industry average CPMs, working on ad load and really personalizing that ad experience to different viewers. But at the same time, it does need to have that scale to really realize all of that. So while it is moving in the right direction, it is definitely behind where Netflix wants it to be. If we think back to when the ad tier was launched at the end of last year, initially they were forecasting 40 million subscribers by the end of Q3 of this year. We're not quite there. We're probably a far amount away from that number. So there's still definitely a lot of room for this to grow for Netflix.
So bottom line, a buy after this initial look at these numbers? Is this an attractive stock?
So if we think about Netflix, there are definitely a number of encouraging signs in the most recent quarter. If we think about that subscriber growth, it's not just that total 8.7 million, it's looking at where they're getting growth. If we think about North America and US and Canada, previous quarters a year ago, it was very hard to eke out 100,000 new subscribers. It's back up to 1.7 million in the most recent quarter. So those are definitely some positive signs to reignite growth in what had been a fairly concentrated and stagnant market. Then also at the same time, maintaining strong subscriber growth outside of the US. If you look at the Asian markets in Europe, these continue to have multi-million subscriber ads. It's definitely some encouraging signs. The open questions, though, heading into the earnings call later today, of course, is how is Netflix thinking about its content spend? Does it need to continue to have that be elevated to continually bring that new content to the platform and see strong subscriber growth? And then also how they're thinking about some of their new initiatives. Cloud gaming has been in the news a lot recently. How tangible of a growth driver can this be for the business is a very important question.
Jamie Lumley, sector analyst at Third Bridge Group. Jamie, thanks so much.
Thank you.